Hello, everyone. I hope you're having a good day, great day, great day, good day. Okay, for those who, my name is Ramira, aka Mira the Goddess 22. For those who do not know me, a little bit about myself. I am 29 years old, stay at home mom to three wonderful boys, and I rob banks legally, and I'm here to teach you how. So if this is your first time of watching, I just want to welcome you to my page, welcome you to listening wherever you're listening from. We are going over the Candlestick Trading Bible. This is a free download on any of your internet browsers. You can download the book or you can be able to purchase the book as well. I'll be more than happy to share that information on how to purchase. Um, if this is your first time, I do want to get you caught up to what's going on. So we've already went through the introduction history of candlesticks. What is a candlestick? The candlestick patterns, and the psychology behind it. We went over the market structure, how to trade trending markets, support and resistance, and how to draw trend lines. So we are going actually over the range of markets today. So before you're like, okay, what, I need you to stop watching this video and go into the previous videos that I do have to get yourself caught up. Make sure you're doing your homework in between this and don't rush. Take your time. Like, even though we're a little bit farther, does not mean that you are not right behind us. All right. So those who have been following me and been coming back, thank you so much for coming back. We are going over today the ranging market, right? And before we get into the ranging market, today's motivation says what? Oh no. It says use the 20-90 rule. I mean, sorry, 21-90 rule. It takes 21 days to create a habit. It takes 90 days to create a lifestyle. I think this fits perfectly to what you're doing in trading. Of course, you're not going to get this overnight. So uh, it does take some time, but once you got it, and you can't don't let it go. All right, take those 21 days to create the habit. If this is just marking up your charts, if this is just coming to look at the charts, is it coming to just read the candlestick Bible? And then it takes 90 days to create the lifestyle. So let's put everything together that we've been reading. Let's train our eyes. Let's know that we have the psychology behind what we're looking at as far as the candlesticks. So that's really cool like that. All right. So ranging market. Ranging markets are pretty straightforward. They are often called sideways markets because their neutral nature makes them appear to drift to the right horizontally. When the market makes a series of higher highs and higher lows, we can say that the market is trending up. But when it stops making these consecutive peaks, we say that the market is ranging. A ranging market moves in a horizontal form where buyers and sellers just keep knocking price back and forth between support and resistance level, between the support and the resistance level. See the example below. Okay, there's the example right there. All right, it says the chart above shows a ranging market. As you can see, the price is bouncing between horizontal support and resistance level. The difference between trending markets and ranging markets is that the trending markets tend to move by forming a pattern of higher high and higher lows in case of an uptrend, and higher low and lower low. It's supposed to be lower highs and lower lows in case of a downtrend. Okay, but emerging markets tend to move horizontally between key support and resistance levels. Your understanding of the difference between both markets will help you better use the right price action strategies and the right market conditions. Trading ranging markets is completely different from trading trending markets because when the market is ranging, it creates equilibrium with buyers are equal to sellers, and there's no one in control. This would generally continue until the range structure broke out, and the trading condition starts to organize. The best buying and selling opportunities occur at key support and resistance levels. There are three ways to trade ranging markets. I'm not going to go into details because what I want you to get here is the skill to look at your charts and decide whether the market is trending or ranging. In the next chapters, I will go into details and I will give the trading tactics and strategies that you will use to trade trending or ranging markets. If you can't differentiate between ranging markets and trending markets, you will not know how to use these price action strategies. The first way to trade ranging markets is by waiting for price to approach support and resistance levels. Then you could buy at key support levels and sell at key resistance levels. See the example below. Okay. Buying at the support and selling at the resistance. All right, as you can see, the market is moving horizontally. In this case, the best buying opportunities occur at the support level, and the best selling opportunities occur at a resistance level. The second way of trading ranging markets is by waiting for the breakout from either the support or resistance level. All right. Uh, when the market is ranging, no one knows what is going to happen. We don't know who's going to be in control of the market. This is why you have to pay attention to the boundaries. But when one of the players decides to take control of the market, we will see a breakout of the support or the resistance level. The breakout means that the ranging period is over and the beginning of a new trend will take place. See the example below. Okay. As you can see, the market was trading between support and resistance levels, and suddenly the price broke out of the resistance level. This indicates that the beginning of a trend is likely to happen. So the best way to enter is after the breakout. It's important to remember that range boundaries are often overshot, given the illusion of a breakout is occurring. This can be very deceptive, and it does trap a lot of traders who position into a breakout. The third way to trade ranging markets is to wait for a pullback after the breakout of the support or the support or the resistance level. Because at this point, I'm going to just be like, whatever. The pullback is another chance to join the trend for traders who didn't enter the breakout. See the example below. As you can see in the chart above, the market was ranging. Price breaks out of the resistance level to indicate the end of the ranging period, the beginning of a new trend. After the breakout, the market comes back to retest the resistance level that becomes support before it goes up. The pullback is your second chance to join the buyers if you missed the breakout. And I'm sorry that I sound so stuffed up. It's nice. All right, but pullbacks don't always occur after every breakout. When it occurs, it represents a great opportunity with a good risk to reward ratio. When you have What you have to remember is that a ranging market moves horizontally between support and the resistance level. These are key levels that are used to have that you have to focus on. The breakout of the support or the resistance level indicates that the ranging period is over. So you have to make sure that the breakout is real to join the new trend safely. If you miss the breakout, wait for the pullback. When it occurs, don't hesitate to enter the market. When you are trading ranging markets, always make sure that the market is worth trading. If you feel like you can't identify the boundaries, support, and resistance, this is a clear indication of a choppy market. In forex, choppy markets are those which have no clear. Sorry, guys. And whereas choppy markets are those which have no clear directions. When you open the market, you find a lot of noise. You can't even decide if the market is ranging or trending. You have to know that you are watching a choppy market. This type of market can make you feel very emotional and doubt your trading strategies as it's as it starts to drop in performance. Okay, choppy markets would make you have a choppy mind. Basically, what they say here. All right, the best way to determine if a market is choppy is just by zooming out on the daily chart and taking in the bigger picture. After some screen time and experience, you will easily be able to identify a market is ranging or it is a choppy market. Here is a good example of a choppy market that is not worth trading. Okay. Notice in the chart above, the price action in the highlighted area is very choppy and it is moving sideways in a very small, tight range. This is a sign of a choppy market that you should stay away from. If a market is choppy, in my opinion, it's not worth trading. If you try to trade it, you will give back your profit shortly after big winners, because markets often consolidate after making big moves. All right, that is a nugget right there. Markets often consolidate after making big moves. All right, so let's go over these examples of what they have for us. All right, so here's an example. Let's look for some resistance levels and support levels of where price may be. All right, on a daily time frame. I mean, that was on a weekly. Now we on a daily time frame. I just wanna. Mm, clear this out. All right, so All right, could do this as well. Where price is ranging back and forth until it breaks out. All right, next seeing the buying and selling opportunities. We kind of already got that highlighted. Buying opportunity. Look at the candlestick. Morning star is. I should put this thing. Keep it where it is. But we have that Morningstar candle. Another Morningstar. Also, there is a bullish Harami inside that Morningstar. We have the sale, bearish engulfing. Uh, okay. That's a candlestick that happened. Hammer, hammer, and then I think the shooting stars going up this way. All right. Fish and Gotham, but these are the selling opportunities. This is the buying opportunities. All right. This one they're talking about the breakout. Okay. Right now we only looking for the breakout. So of course we know price is going to sell because that's what happens. Um, but okay, she finally breaks out. She's been trending back and forth. She's selling. Looks like she's doing good. She finally break out. She break out right here with this long candle right here. Okay. We've identified the breakout. We've identified the breakout. Can you hear me? We have identified the breakout and the break the structure right here in that area. Okay. We've identified the breakout. What's next? I'm waiting for a pullback. Does this give us a pullback? Yes, it does. For example, if it breaks out, it retests, right? And she starts selling again. So if you miss that first breakout, right? Just wait for price to retest. If it does retest, because they did say price doesn't always pull back, right? So price did pull back, and then she sold. That would be that second opportunity to join the market, to join the trend. All right. And then we need to just identify choppy market. Um, this could be one right here. All of this right here. It's just going back and forth. We don't know who's in control. We can't even get a clear thing. Okay. All right, guys. So we see an example of the resistance and support levels. We see where you can buy and where you can sell from. We've identified the breakout. We've identified the pullback, and that's where you can enter. And we've also identified choppy markets and how it looks. Okay, that was a bit, but really simple. Go through the charts. You could try your eyes so that you could be able to see it and you could know what you're looking at. Okay, so next week we will follow real time frames and top down analysis. Also, if I'm not mistaken, next week, when, but when this comes out, it's going to be the week probably before your New Year's, at least day before the New Year's. So I wish you guys a happy New Year, and I will see you guys in 2024. Wow. All right, make sure that you guys follow me, like, subscribe, share. We're the Goddess 22, MARTHGGODESS. Yes, I know it's one D. That's how I want it to be. And don't forget those two number twos. Also, make sure you join our Facebook group, the Goddess Tribe. That's with two D's, the Goddess GODDESS Tribe. All right, I am out. I need some rest because I feel like crap with these sniffles. And yeah, talk to you soon.